Can I actually save thousands on my Canadian mortgage using the Smith Manoeuvre? Let's find out. The Smith Manoeuvre is a powerful, yet often misunderstood, strategy for Canadian homeowners looking to save big on their mortgage. It's a clever way to turn your mortgage into a wealth-building tool, but many people don't know it exists or how it works. High mortgage interest payments are a huge burden for many Canadian homeowners. Month after month, you see a big chunk of your money going towards interest, and it feels like you're not getting anywhere. Most homeowners just accept it as a necessary cost, but the truth is, there are strategies to mitigate this burden. You don't have to be stuck with high interest payments. Your money could be going further, but you need to know the right moves to make. The problem is, many homeowners aren't aware of the options available to them. They're stuck on autopilot, making regular mortgage payments without a clear plan to pay off their debt. But what if you could accelerate your mortgage payments and save thousands of dollars in interest? It starts with understanding the Smith Manoeuvre and how it can work for you. The Smith Manoeuvre works by converting non-deductible mortgage debt into tax-deductible investment debt. This means you can turn your mortgage into a tax-deductible loan, which can save you thousands of dollars in interest payments. To make this happen, you'll need a readvanceable mortgage and an investment loan. A readvanceable mortgage allows you to borrow against your home equity, and an investment loan lets you invest in assets that can generate income. The process is simpler than you might think. You borrow against your home equity, invest the borrowed funds, and then use the investment income to pay down your mortgage. As you pay down your mortgage, you can re-borrow against your home equity to invest again, creating a cycle of wealth building. The core components are a readvanceable mortgage and an investment loan, which work together to help you save on interest and build wealth. Let's say you have a $500,000 mortgage and you're able to implement the Smith Manoeuvre effectively. Over the life of your mortgage, you could save tens of thousands of dollars in interest payments. That's money that could be going towards your retirement savings, your kids' education, or even a down payment on a second home. The potential savings are huge, and it's worth exploring how the Smith Manoeuvre can work for you. To put it into perspective, imagine being able to retire early, or being able to afford a vacation home. The Smith Manoeuvre can help make those dreams a reality. By converting non-deductible mortgage debt into tax-deductible investment debt, you can save thousands of dollars in interest payments and build wealth over time. The Smith Manoeuvre can help you accelerate debt repayment, save on taxes, and build wealth over time. Of course, it's essential to talk to a financial professional to make sure it's the right strategy for your situation. But if you're looking for a way to save big on your Canadian mortgage, the Smith Manoeuvre is definitely worth exploring. Thanks for watching. If you found this helpful, hit the like button and subscribe for more Canadian financial tips. Share your thoughts or questions about the Smith Manoeuvre in the comments below.